Hey guys, it's me Tang. So the video is about a tutorial on how to trade meme coins, right? Today I'm going to be teaching you guys how to the basics of trading meme coins. You know, the risks, your responsibilities, what to do, everything in this tutorial, right? So disclaimer, 90% of meme coin traders lose money. I'm not going to lie, they just lose money. You could go on meme coins, see the top traders in that a random coin, and they'll be negative. Right, and they still somehow have a balance because they keep trying and trying. You know, they want that good one trade. It won't happen to them. You know, 10%, lucky, really smart, fast, right? Hopefully that'll be you just off this tutorial. But a few things to know: if you cannot read a book, I don't suggest doing meme coins. You have to just sit there and be patient, know what to do, everything. You have to stay calm. You know, so if you're good at not procrastinating, you know, doing regular human stuff without having to watch TikTok, this is for you, right? And TikTok, I don't really care if you doom scroll. I'm just saying, I'm using TikTok as an example. If you have any bad habits that you know you won't even like be good at meme coin trading just based off, don't do it. You're gonna lose money. So let's straight get into it. You know, I don't think you guys care about all that. You guys just want to risk it and take it for the biscuit. So let's go over how to deposit money into meme coins. You can't just add your credit card or debit card or your dad's credit card, debit card into this, right? You need to have either Coinbase if you're above 18, or get your dad to have your Coinbase, or you could go on G2G, buy gift cards, you know, deposit it, and then switch it over. That's gonna cost way more fees. If it's worth it for you, you want to try it, go ahead. But I suggest getting the Coinbase because Coinbase fees are only like $1 for 30 bucks. Second, you need at least $30, 25 to 30. You can use that first 5, test out your things, what you think is happening, test it out, right? The rest is for you. And the reason you can't just put in $5 and do $1 trades, the fees are too much to even for you to make profit, right? Let's say you put in $1, you need to make at least $1.50, and then you break even right there. So do at least $4 to $5 minimum, maybe 3. So let's go on a random coin, a safe coin, right? I'm going to show you guys this coin. This coin is really safe. Even though you won't really make any profits on it, it's already high cap. So let me explain to you guys what market cap is. This is the most important thing about trading. Market cap, when something starts, it has $0 in the market cap, right? Let me go on to 1 week so I could easily show you guys. Okay, this is... Okay, so see this? Market cap right here. It usually starts off at 0. I can't really... Here, let me go on a newer coin so I could actually... Like this one. Okay. You guys noticed how it starts off at 0? So for some reason I have it at that much. Give me 1 minute. Okay, right here. Starts off at 1K, 2K. The more people invest, the higher the market cap. Right? Nobody sold right here. And if they did, it was really a low amount, so the chart didn't even notice it. Well, it did, but you know, it didn't add it up because more people were buying over than selling. So if you keep buying and buying, this will go up. Right? The more this will go up, the more money that you make. Not because you're buying. Let's say you bought right here. You noticed this coin was going up, you know. You're like, fine, I'm going to risk it. Somebody, you know, multiple people do the same thing as you, but a little more higher, and it just keeps adding up, right? Until it gets here. Now, since you did it right here, you would have made this much profit. From here, 100K, to all the way to 30K. So you would have basically, if you put in $5, you would have made 12 right here, just off this. Now, the reason people sold is when, okay, let me explain how the market cap goes down now. The market cap goes down is when people sell, because there's less money for people to have. So that makes sure if you still hold it right here, if you didn't sell right here, and you kept holding, you would have lost money. You wouldn't lose your personal money, but the 12 would be going down now, going down. Now it's 11, now it's 10, now it's 9, now it's 7, now it's 6. You know, 5, 4, 3, and then you're back at 3 right here. So that's why you want to sell at high market cap. You just want to get your money, and then boom, market cap doesn't matter anymore since you already got your money, unless you put it back in. See, people put it back in once they saw it go down. It's called scalping right here. They see it go down, they instantly buy. Multiple people do the same thing. Goes up, and then they instantly sell, right? Make that quick little buck, and you keep adding it up. Now, that's just market cap, right? Give an example. I don't know the exact definition and everything else behind it. You can search it up. Now, let's talk about this. So, let's say you're at $3 or $10, right? You're trying to invest in $10. I don't suggest having this at default. Make the slippage rate, max slippage, 3.1 to 5 if you're investing less than $10. Because slippage rate is how much the price will move before you accept it, right? You don't want that to be too much. And you want to make sure the priority fee is also low. Because unless you're doing $100 at once, or you're doing like 20 bucks at once really fast, you don't want to have a priority fee that's high. So the default would be this much, right? That's what you would see. I want you to make it this much. Why? Because if you're investing in $1, like theoretically $1, I don't suggest doing that. $1. You put in $1, the regular fees will make it, you'll have to make $1.50. But the market treats it as you put in $1. But it will make you pay $1.50. And then to even get your money back, you need to make extra 50 cents. That's just to break even. Then you could sell, right? But, if it goes on top of that, you made a profit then. See, that's why you want to have this low as well. This just makes sure your trade goes in faster. If something's moving really fast, you want to make the slippage rate bigger. Now let's talk about callouts. Callouts. What are callouts? When people see a coin that they like and they want it also to go up with them, you could follow people, right? So if you find someone really successful, you follow them. And then once they call something out, you usually see it instantly. And then why you follow them is because they're successful and you want to copy what they're doing. I don't suggest full on copy trading because people could rug that against you. So see all these people that called it out. It could be random people with no followers. But there is like a public channel somewhere here. I'm not going to find it. Public channel that calls out all the callouts. If people see multiple callouts for one coin and the coins that are low market cap, they're going to want to invest. That's what callouts are. Calling it out. Like Donald Trump on Twitter. Same thing. Now, let's talk about rug pulling. This is the most important thing before you invest in a coin that's on the movers list. View the bubble map. Alright? As you guys can see, it's very spread. This is good. Unless you're trading in, like, see these two? These two are big ballers right here. High profit people, like 1.6, 1.6. These are the same people. If they're connected, it's the same people. As you guys can see. These people are separate. They could have way more than this combined, but they're separate. They'd probably make a bigger impact. But what makes separate people, alternative accounts dangerous is, let me just show you guys this. So let's say you saw this on the bubble map. One big circle to a lot of smaller ones. Like usually like this big. Not this big, I just, scrambling and shit, right? If you see this, do not buy unless it is moving like this. Let's say it goes up to make it seem like it's moving. Right as it reaches here, you want to buy. And once it gets here, you want to sell before the bots auto sell. Because they want to make the coin look like it's moving up. And they slowly do make it go up. But you don't know when they're going to rug pull. Once this guy issues a command on Telegram, he has like a Telegram bot, you don't need to know anything about that until you get a lot of money into this. One big Telegram bot that controls all of these at once. Think of it as like a account manager. He tells them sell all. If they all sell and he sells, guess what? There's going to be some idiots that decided to buy, and he's going to steal their money, and there's going to be no liquidity in the pool, right? Liquidity is how much money is in a coin, right? The market cap could say 100 mil. 100 mil, and the coin would probably have like 20 mil in liquidity. This always happens, right? And if you also see that, sometimes they honey lock it. what a honey lock is, honey pot, is you invest for, like, they leave it open and it makes it look like it's not even a rug pull. Once you invest, they rug it and they make the liquidity super low and the market cap super high. What this does is it makes you not being able to sell. So you're gonna have to put your put this all the way at the lowest. If this somehow happens to you, put this all the way at the lowest and just start spam selling. Like every 10 seconds you sell. Hopefully, once it's about a rug pull, you could just sell automatically. You're gonna lose money on that though, for sure. Now, that's pretty much it. That's all you need to know. Let me show you guys some extra stuff. You know, you could make a coin, call it out, post a bounty. Let me talk about posting bounties. So, some people that want their coin to be more up, they usually pay people to post videos, like a bounty, right? They pay them like $5, and so this one coin would help out homeless people, which made it like a meme coin itself, right? Something trending. So it would hire people to make goodie bags with their logo on it, and then advertise the meme coin as well, and then they'd pay it. Let's talk about VCs, right? VCs right here. You could join, network with people, other traders. Most of the people in VC are going to be losers, I'm not going to lie. You know, the reason they're there is to learn. So watch out for that. And I'm not going to go over more. I'm yapping right now. So I'm going to get back on the full screen. So this is the video summary right here. Remember, 90% of traders fail, 10% win. You think you're a gambler, lucky, whatever. Please don't put in too much at once. You're gonna lose it. That's how I started. I made 2K at the end of the month, and it was just off one lucky trade, one, not even multiple, one. Right? I was on a losing streak. I think I was down 200, and then I was making like 500, and then it would instantly go down because I couldn't sell in time. I didn't have bots back then. You don't need bots to make it like me, right? I didn't even use bots to make that 2K. I'm trying to get into bots right now. So take what you want from this video. Make sure you join Discords. Make sure you actually look at the coin that you're trying to buy, and it's not just trending. That's why you want to buy it. Good luck trading. Goodbye.